sound now?
Yes, now we do.
All right, this is Ugly Old Goat, and haven't been on for a while. Hopefully we'll start doing this every day at not quite this time. We want to do it about an hour earlier at 1 o'clock. But I wanted to go through the markets right now because we did do some interesting things today. Again, today we broke through the 2-week low, which that's how I measure trends. You also have, and I have the seasonal chart up here. If you notice, you have a very strong seasonal down in January, and up in February, but it kind of fits in with where the market is now. We can look at some other seasonal charts. Let's see, I think this is one here. There's one too. You can see the same thing. Here's the January. Here it just has the first 2 weeks of January are sharply down. And these all agree. I don't want to do that one yet, but we've got okay, and we have this seasonal here. Once again, you'll see the January. You have this strong seasonal up, which we, of course, called this last summer back in August and September. But now we're in December, and you'll see that January just tends to be a down month. And there's a lot of other things going on here that I want to point out. We're going to go into the, I want to look at, this is the Merck, the Chicago Merck exchange. And I think this is a very important market because if you go here, we go to the, this is not the right one. I want the Merck, this one here. Okay, if you see here, we have this huge gap that we have here, a breakaway gap. Of course, it got everybody bullish. And we could keep, I mean, you have these Super Bowls that think we're going to, 200,000 or a million or whatever. I'm going to go into some fundamental changes where I think it's very possible this won't happen until we have a very substantial break. But here we are, we have this thing, this gap will eventually get closed, I think, someday. The question is it going to go to 200,000 or 500,000, or where's it going to go before it does it, or is it going to do it now? We've got, the significant thing is what we did last night is we took out if we go to the weekly charts, we took out the 2-week low. Now we had a very sharp rally from doing that, which is not unusual. And I notice we're getting a pretty good sell-off here now. But the moving averages have all turned down. And the other thing that I want to show is I'm going to go to the monthly MRI. Now, I don't know how it is on the Merck. We'll look at that. It's not the one. Yeah, it's here. Here's what I'm looking at. This is the monthly MRI. And I see this 9. And when you get a green 1, 2, 3, that is not, that's a very bearish signal to me. So this market, actually, I put 40,000 back on the table. We could actually go down and break through this low. Now, I think there's some big fundamentals why this could happen. ETFs is number 1, and Michael Saylor's number 2. Guys, I'm the biggest believer in Bitcoin around. So, but the problem is that you've got all these people. We really don't know what the ETFs are not hodlers. We don't know what Michael Saylor's doing. There is the use case for Bitcoin. Look, Bitcoin is not money. The economic case, it will never be money because it's not the most tradable item around. That does not mean it's not a worthy speculation. Believe me, it is. And this is what I've taught all along, is this is why we dollar cost average. But with these ETFs and with Saylor in the market now, what we've done is, I'm actually working on this article now, and say ETFs and Saylor crony capitalism can flash crash Bitcoin. And Bitcoin's not money. Bitcoin sucks as cash. Bitcoin's the use case for Bitcoin is it's unconfiscatable and has no borders. This is what makes it a worthy speculation. But it's not made for retirement accounts. The reason you have it in it's not for retirement accounts. It's something, it's an asset that you have that cannot be easily taken from you, and it has no borders. And what we're doing now is we're putting this into the financial markets, so now it can be confiscated. It can be manipulated through the dollar. And, if push comes to shove, Michael Saylor could get liquidated. These ETFs could get liquidated. What they're doing is putting Bitcoin in a confiscatable platform. This is the problem that I see in this market right now. I'm not saying we're going down below 40,000, but what I'm saying is what we've done is basically the three greatest swindles are inflation, and of course, all these people behind the ETFs and Michael Saylor, they want inflation. Number two is entitlements. They want entitlements. They want to be regulation. They want to have special privileges. I mean, the entitlements now is they want to have this Bitcoin reserve. And then the third thing they want is regulation. So these three things are not really healthy for Bitcoin. You're putting Bitcoin in a situation where you can now flash crash because it's not in strong hands. It is in very, very weak hands. So we're going to, okay. That's what I'm looking at. So let's go look. Now, I know everybody wants to know where the market is going. Guys, what I teach is equity trading. I don't know where the market is going, but you trade accordingly. Because I don't know, that's how I trade, and this is what I teach. Let's go look. Here we are. Wow, this market has really got hammered here after I did buy. I was long. I've been short and got long above the 2 week when went just above. I bought it too quick and bought it above the 2 week low, and then I used a goat stop and bought more when we took out that 2 week low and took most of it off. Now we don't finish strong today, and it doesn't look like we will. I probably will. I have a very small long position. You see right here. I have my open position is I've got actually now I've got a small loss in it. I've realized $250 and there's $440. I'm down about $200 on this trade, but I will be looking to probably turn this around. I don't look for it to close down in here, but I didn't look for it to break. But I would say unless this market can close above 94,200, we probably are going to have problems in Bitcoin, at least for the first part of this year. And so that's what I wanted to outline. Let me show you. Let's see, where's the... Guys, I'm not bearish. Bitcoin is a wise speculation. And if you look, how do I make this smaller? Eddie? That's too big.
No, it's perfect size for that.
Oh, is it? Oh, okay.
Yeah.
Oh, okay, okay.
That way...
Here's a dog. Again, what I teach is Bitcoin's a worthy speculation. And so if you don't really need to pay attention too much to price. These are studies that have been done buying the tops. If you started buying the top, and the last top was made in October 2021. If you started buying at that top at $61,000 and just bought $500 every month, through the last month, you'd have put in a total of $19,500, and that you've gained 3x on that. Now you were down at times. For example, here you had $5,000 in the market, and you were down about half your equity. But in the long run, what happens with dollar cost averaging, you're actually buying more at lower prices than you are higher prices. So if you go to our website and look for this article, it's never too late for Bitcoin. And then what we do is we outline the results of dollar cost averaging from every top. So if you have the very worst timing and you dollar cost average, you're going to be just fine in Bitcoin. But trading, it's a whole different matter. And guys, if you trade and you're having problems trading, this is what I teach. What I do is teach you to manage your funds. And so this is basically what we do. So anyway, I just wanted to outline this. I'm going to be writing a new article on this. On the market, but I see right now, let's see what we're doing here. Yeah, we had a really strong rally up, and it's just not holding at all. It'll be interesting to see where we close, but this market, definitely is very volatile and has some problems. But again, what's the fundamentals that have changed is that the market with these ETFs and with Michael Saylor is actually in weak hands. Now, there's a really good, do we have this, Bitcoin University had a real good thing on.
No, you didn't tell me to.
Oh, okay. Bitcoin University has a really good, I'll put it on the post on the Michael Saylor situation, and Michael Saylor just says, "But I'll always be buying the highs," and that's fine as long as you're not taking a.
This one?
Yeah, that's it. So buying the Bitcoin top forever, and if you can, I'll put a link in there. But watch this thing because. Matthew Crowder is absolutely right, but I think what he misses is that we really don't know what Michael Saylor is doing. We don't know if he's leveraged. And the problem is he is in the system. He is what I call a Bitcoin crony capitalist. He wants regulation. He wants people to put their retirement funds, their IRAs and their retirement accounts into his stock. Well, the problem with that is, why do we even have retirement accounts? What it is a regulatory thing. The reason we have retirement accounts, it was a lobby that industry got to avoid taxes, to avoid income tax. So the real situation here, we don't need retirement accounts if we just stop, taxing income. And, Donald Trump came up with a great idea. Well, no more taxes on tips. Well, how about no more tax on any labor? Labor should not be taxed. Such a simple concept. And we know what? We got off track with this thing when we instituted the Federal Reserve. We instituted an income tax, and now we're living with it. And Bitcoin is not made for these legacy markets that are just full of special interests. And so in my estimation, we have set Bitcoin. I will not rule out a flash crash. In fact, that's how I say, I'm writing this article now. I say ETFs and Saylor crony capitalism can lead to flash crash Bitcoin. And there's just so much wrong thinking in Bitcoin. It's not money. Gold, people don't understand, gold was not money. The gold standard was used as money. Banknotes were created based on a gold standard. And this same thing can emerge with Bitcoin. But it's not going to be Bitcoin. It's going to be like banknotes issued in Bitcoin. It's really what we need is stable coins in Bitcoin. And as long as that is represented by the new wealth coming into the marketplace, it's a non-inflationary, self-liquidating commercial banking. This is what the gold standard is. We had the Gilded Age because the market figured out free market banking. We're not there. We're not even close. People don't get it. And I'm going to be writing more and more about this. One of my heroes, Arthur Hayes, he doesn't get it. He started a shitcoin and he doesn't understand. Once you make a commitment to make it redeemable or something, you can't change the redeemability. And this is what shitcoins do. Now, the stable coins have been able to do that. They've been able to beat the banking system by creating these stable coins that are actually more efficient transferring wealth around the world than using the banking system. And this is what needs to be done with Bitcoin. I'm done for today. I'll get back tomorrow and see you then. Bye-bye.